Welcome to ForexTV.com's PM Exchange. It's Friday, December 7th. I'm Remy Hoki. Today I'm joined by Nick Bennenbroek, Head of Currency Strategy at Wells Fargo. Nick joins us to discuss today's non-farm payrolls data as well as next week's FOMC meeting. Good afternoon, Nick.
Good afternoon.
Thanks for coming on the show today.
You're welcome. Glad to be here.
Thanks. Well, in today's session, we saw that non-farm payrolls came in slightly higher than the consensus forecast at 94,000. But given that the ADP forecast came in strong, it didn't take the market by too much of a surprise. But first and foremost, I'd like to ask you how this affects your Fed rate outlook.
Well, I think the result was relatively neutral. It was close to forecast. Doesn't change my Fed outlook. I think it's 25 basis points from the Federal Reserve next week. I think that the type of number we got today doesn't support the most pessimistic views of the U.S. economy. That's why I'd favour 25 basis point reduction as opposed to 50.
Okay, well, now that you've given us your rate expectations from the Fed on December 11th, let's take a look at euro-dollar. In New York afternoon trade, euro-dollar is trading around 146.60. But going into the weekend, what ranges do you see for the pair?
Well, I think on the low side we could see somewhere around 145 for the euro. Well, on the high side, I think up towards sort of 147.50, 148, somewhere in that region is probably where we're going to see the euro top out.
Okay, and moving on to another employment report we got out this morning from Canada. We got a stronger than expected employment report, and as a result, we saw the CAD gain against the dollar, the yen, as well as the Aussie. Going into the weekend, do you expect the CAD to consolidate gains against the majors?
I think we'll probably see it consolidate. I don't think we're going to see it extend the gains from where we are. It was a super strong report in terms of private sector jobs, as well as payroll or full-time employment as well. I would say that the Canadian dollar got very close to parity again, but that seemed to provide some resistance. So we'll basically stay where we are and move a little lower again as far as the Canadian dollar is concerned.
Okay, let's move on to the high yielder of the sterling against the U.S. dollar. In London trade, we saw sterling hit a session high of 203.50, but now it's pulled back under 203. So if you could give us your levels for the sterling against the U.S. dollar.
Well, yes, the sterling has suffered quite a lot this week with the rate cut, for example, out of the UK. I think this week's lows, which were around 201.80, would be provide important support. And on the upside, maybe 205. So that might be the range over the next several days, that quite wide range.
Okay, now let's move on to the Japanese yen. In today's session, the yen has seen weakness against the dollar as well as the euro. And earlier, dollar yen broke past 111.70. And we also saw euro yen gain to the 163.70 level. If you could give us your forecast for the yen against the euro and the dollar.
Yeah, sure. Against the dollar, I think we're probably going to see the yen continue to weaken a little bit from where we are. So I think we could get back up towards the sort of the 113 level, sort of 112.90, 113. I believe that was a recent high. Then as far as against the euro is concerned, I suspect we'll probably see some marginal upside there. So maybe towards, I don't know, maybe 164.50 in that region might be an area where the euro-yen cross could get to.
Okay, well, now that we've taken a look at the euro-yen cross, if we could move on to the Aussie against the yen as well as the dollar. We saw the Aussie dollar consolidate gains in a range between 88.05 and 15 in the New York session, and Aussie yen saw a session high of 98 and 50. So if you could give us your forecast for the Aussie against the dollar and the yen.
I expect the Australian dollar to recover and to move higher over time. I think we could see, maybe not immediately, but before too long, I think we'll see the Australian dollar against US dollar challenging 90 cents, and the Aussie yen cross, I think we'll see that challenging the 100 level before too long as well.
Okay, and this week we did have a slew of central bank meetings. We saw the BOC and the BOE cut rates, and we also had the RBA, the RBNZ, as well as the ECB. So I want to touch on ECB President Trichet's comments. If you could give us your take on his comments following the announcement yesterday.
Sure. A little surprising. I think maybe he was a little more hawkish than I would have anticipated, for example. Really not much change in tone or language from the ECB. They're still worried about inflation and emphasising those inflation risks. So, I think that did provide a little bit of support for the euro. But the European economy is slowing. I think we're going to see a slowdown there. I don't actually think we'll see the bank follow through with a rate increase, and indeed I would expect many months into the future that the next move from the ECB will probably be a rate cut.
Okay, well, you've given us your short-term forecast for the major currency pairs, and you've just given us your take on the central banks in terms of rate. So how do you see rate differentials weighing on the major currency pairs in the longer term as we head into year-end?
I think in the longer term, probably we're going to see the international currencies weaken against the dollar. We've already seen, for example, the dollar price in a lot of bad news, and the Federal Reserve easing expectations are already quite aggressive. So I suspect that it's going to be difficult for things to necessarily get worse as far as the US is concerned. Dollar's probably hit a low and will start to rebound. You'll see some of those international currencies weaken against the greenback.
Okay, and last but not least, Nick, looking ahead to next week, we do have the rate announcement from the FOMC and also from the Swiss National Bank. But in terms of event risk in the FX market, what should traders be focusing on next week?
I think definitely the FOMC. The Swiss National Bank does look like they're not going to do anything to 275 because of the market volatility that's occurring right now. The US, the FOMC, more important both because the US is obviously a larger economy and the financial markets have greater impact on the world in general, and also a little more uncertainty specifically regarding the outcome, whether it's 25 basis points or 50 basis points. So a lot more riding on the FOMC.
Okay, Nick, thank you very much for your insight and analysis this afternoon.
Thank you.
This has been your Forex News with Nick Bennenbroek, Head of Currency Strategy at Wells Fargo. Next up, we have your equities and commodities wrap-up for the day. U.S. equities moved in and out of positive territory throughout the session. The Dow managed to eke out a small gain on the day after rallying in the previous sessions. The major indexes did not hold on to gains seen earlier in the day, but ended up for the week. Investors weighed today's economic data as the market awaits the Fed rate announcement next Tuesday. In U.S. economic data, the Labor Department reported that the economy added 94,000 non-farm payrolls jobs last month. NFP for the previous months of October and September were revised. NFP was increased to 170,000 in October and downwardly revised to 44,000 in September. Meanwhile, the unemployment rate was unchanged at 4.7% in November. And in other data, December's University of Michigan's preliminary reading of consumer sentiment fell to 74.5 in December, down from 76.1 in November. By session end, the Dow Jones Industrial Average had gained over 5.5 points, ending at 13,625.58. The tech-heavy NASDAQ fell 2.87 points to close down at 2,706.16, while the S&P 500 fell 2.68 on the day to end at 1,504.66. In the fixed income market, U.S. Treasury bonds saw a sell-off, with the yield on the benchmark 10-year note climbing well past the 4% mark. Treasury prices weakened after the latest U.S. employment situation data, which showed a healthy pace of jobs growth in November. The benchmark 10-year Treasury note fell with its yield up to 4.12% from 4.02% late Thursday. The 30-year long bond declined with the yield rising to 4.58% from 4.5% late in the previous session. And in energy, crude oil futures fell 2.2% on the day after rallying over 3% in the previous session. NYMEX crude oil declined $3.16 in the session to an intraday low of $87.07 a barrel. At the end of the NYMEX session, January crude was down $1.95, closing at $88.28 a barrel. And in other petroleum products, January RBOB gasoline fell 3.23 cents to $2.26.90 a gallon. January heating oil lost 4.03 cents to $2.50.47 a gallon. Meanwhile, January nat gas futures fell 17.5 cents, ending at $7.155 per million BTU. And taking a look at the metals complex, gold futures settled down almost 1% on the day. The precious metal managed to hold above the $800 an ounce mark. Gold futures ended the week up over $11 an ounce. February gold ended down by $6.90 at $800.20 an ounce. And in other metals, March silver fell 10.5 cents to $14.52 an ounce. Meanwhile, December copper rallied 8.6 cents or 2.5%, closing at $3.0945 a pound. Today we're joined by Derek Fry, a head trader at ONF Futures and Options. He'll recap the week's action in energy and metals and also give us his outlook ahead of the weekend.
Okay, recapping the action that we saw in both the metals and energy sectors today. I'll start with the metals. We did see a pullback to and slightly through $800 on the price of gold today. We continue to be sellers of gold on rallies over 800, really over 805, frankly. And we expect to see a retest of the lows posted on November 30th, which were about the 780 level. That's our first target. We do have some indicators that tell us there's an outside chance, at least, of a push to about 750. So we will cover a portion of our position if we test the 780 level, and then look to see if we will push through it on a move towards, like I said, 750. But bottom line is, at least for the near term, for looking out through next week at least, we will continue to be sellers of rallies rather than buyers. Longer term, of course, we're very bullish the price of gold, but near term, we feel that we have reached at least a short-term point of exhaustion. I think that's pretty obvious already in the pullbacks off the 850 highs that we've seen. So, but we don't feel that this pullback has yet run its full course. So we continue to look for a deeper correction. Looking at silver real quick, silver has a very strong support level at $14. We continue to think that that's probably going to hold over the near term. So we're very light buyers at that level. But it's not any kind of a trade that we have huge confidence in, so I would caution anybody that's going to try to do that. But for at least the near term, $14 does look like a fairly strong support level. Moving over to the energy sector, we did see a nice pullback today in crude oil after another push back up to 90, or through 90. I mentioned earlier in the week that we had expected somewhere between 85 and 88 to hold out as support. So far we've seen that hold out, and we continue to be buyers of crude below 88, with stops below 85, and really looking for a test, or I should say a retest of the old highs by year's end, retest of about the $99 level on the front month. So look for more upside. By the end of next week, we expect to be in the low to mid 90s in price. So we're like I said, we've already accumulated a decent position down here below 88, and at this point, we're really just looking to hold it for that push back up into the 90s. Quick mention of natural gas. Bottom line there is we're buyers on dips, and really looking for actually a significant move in natural gas as we move into Q1 of next year.
That was Derek Fry, head trader at ONF Futures and Options, with his commodities commentary. And that's it for today's edition of PM Exchange. I'm Remy Hokie. Tune in Monday morning for your latest news update right here on ForexTV.com. Have a great weekend.